Hey everyone, and a special welcome if you're joining us today for the Stock Doc podcast.
Great to have you with us.
You've landed on the deep dive. This is where we take complex topics, dig into the sources, and really try to pull out the key insights for you.
And today, we're zeroing in on Dell Technologies. We're looking at it through the lens of a specific investment analysis.
That's right. We've got an investment thesis here, dated May 31st, 2025, and it really dives into Dell's role in, well, what the source calls the booming AI infrastructure market.
So our goal today, our mission for this deep dive, is basically to unpack the arguments in this analysis.
Yeah, what are the main points, the numbers they use?
Exactly. And the opportunities and, the risks that this particular source sees. We want to help you get a clear picture of what this investment thesis is really saying.
Okay, let's get into it then. The source lays out a pretty clear investment thesis right at the start. What's the core idea?
The main thrust is that Dell Technologies represents a compelling way to invest in the whole AI infrastructure build-out. It positions Dell not just as a player, but as a leading provider for enterprise AI infrastructure. Sort of uniquely placed, they argue.
And they don't waste time backing that up. There's some big eye-popping numbers right away about recent performance. Tell us about those Q1 orders and the backlog they mentioned.
Absolutely. The analysis flags what it calls record AI server orders. We're talking $12.1 billion in Q1 alone.
Just Q1.
Just Q1.
Yeah.
And the key thing they point out is that this number, $12.1 billion, is actually more than all the AI servers Dell shipped in the entire previous fiscal year.
Wow. Okay, that's quite a jump.
It is. And on top of that, they cite a $14.4 billion AI order backlog.
So orders already booked but not yet delivered or billed.
Exactly. And that backlog is important because, it gives them pretty significant visibility into future revenue. Kind of locks in business.
Right, surpassing a whole year in one quarter. That really does suggest a huge acceleration in demand, doesn't it?
It absolutely does. And that's the source's prime evidence for the whole AI boom idea and for Dell's ability to grab a big piece of it early on.
The analysis also brings up valuation as part of the investment case. How does it frame Dell's value when this report came out?
It uses the term exceptionally attractive.
Okay.
Specifically, it notes a forward price to earnings ratio, or PE, of 11.58x.
Right, PE. How much you pay for their earnings. Lower can sometimes mean cheaper, potentially.
Depending on growth, exactly. And they also point to strong profitability metrics, like a trailing 12 months return on equity ROE of 44.30%.
Which pretty high. Shows efficiency in using shareholder money.
That's the idea, yeah. High ROE suggests good profit generation from equity. And they also mention a recent dividend hike, up 18% to $2.10 per share.
Okay.
Which gives it a yield of about 1.89%. The source interprets that dividend increase as, management showing confidence in their future cash flow.
So putting those numbers together, the source is basically saying Dell looked undervalued compared to its AI growth potential at that time.
That's precisely the argument. At the share price mentioned, $111.27, they saw it as attractive, especially when you look at the AI story they're painting.
How did it compare to others?
Well, they highlight it was trading at a noticeable discount. The broader tech sector PE was around 21.4x, they say.
Wow.
And even other companies seen as AI infrastructure peers were trading higher, closer to 18.5x on average.
So Dell looked cheap relative to both.
According to this analysis, yes. And based on that, they suggest a fair value estimate for Dell somewhere in the range of $140 to $160 per share.
Which implies quite a bit of upside from that $111 price point.
Yeah, roughly 26% to 44% potential upside based on their growth projections, and assigning Dell a target PE multiple of maybe 15 to 17 times earnings going forward.
Okay, here's where it gets really interesting for me. How exactly did Dell manage to position itself to capture all this AI demand? The source seems to suggest they're a leader, maybe even the leader for enterprises. What's behind that claim?
The analysis points to several connected factors. First off, it loops back to that performance we just talked about.
The huge orders.
Right. Those record Q1 orders and the big backlog, they're not just numbers on a page. The source presents them as hard evidence that Dell is winning major enterprise deals right now.
Okay.
And they note that the relevant business segment, server and networking, was already showing strong growth, up 16% year over year to $6.3 billion in revenue.
And that long relationship they have with NVIDIA, that seems crucial here.
Oh, absolutely central. The analysis describes it as incredibly comprehensive, deeply integrated.
How so?
Well, it mentions a relationship spanning over 25 years.
Wow.
Yeah, and it involves deep technical collaboration, Dell getting early access to NVIDIA's product plans, joint engineering, co-development, even a joint go-to-market alliance.
So much more than just Dell buying chips from NVIDIA.
Exactly. They're positioned as a strategic partner. The analysis specifically calls out the Dell AI Factory with NVIDIA. It's basically their branded portfolio of solutions designed together to handle the toughest AI workloads. Things built around NVIDIA's latest architectures like the B200, GB200, and the newest Blackwell platform.
Right.
They even note Dell was actually first to market with servers based on the Blackwell Ultra chips.
So it's really about building the whole system,
Mhm.
optimized, and being right at the front edge of the technology integration.
Precisely. The source really leans into this Dell AI Factory concept. It's framed as a comprehensive platform approach.
Not just selling hardware bits and pieces.
Right. It positions Dell as this, indispensable partner helping big companies actually implement AI, not just buy the gear. They talk about the sheer breadth of Dell's portfolio, too.
Covering what areas?
Pretty much everything. From client AI, I think high-powered AI PCs like their Pro Max line using architectures like Grace Blackwell.
Okay, so right down to the desktop.
Yep. All the way through edge computing using things like Dell Native Edge to process data closer to where it's created. And then, of course, the core data center stuff.
Servers and storage.
PowerEdge XE servers, specialized storage like PowerScale, which the source notes achieved, get this, 220% faster data ingestion for AI training compared to older systems.
Impressive.
And they state Dell already has over 3,000 global customers using these kinds of integrated AI solutions.
Let's pivot a bit to the financials presented in the source. Beyond just evaluation metrics, what does the analysis say about Dell's recent financial health and how that supports this AI growth story?
It really highlights what it sees as strong underlying financial performance, kind of the bedrock supporting the AI push.
Okay.
Key indicators they mention include that high TTM ROE we talked about, 44.30%, and also strong TTM EBITDA, that's earnings before interest, taxes, depreciation, and amortization.
A measure of operating cash flow, roughly.
Right. It came in at $10.19 billion. The source points to numbers like these as evidence of, efficient capital use and strong cash generation.
Any other metrics mentioned?
They note the beta is 1.02, which basically suggests the stock's volatility has been pretty much in line with the overall market, not excessively jumpy, not unusually calm.
And how did the different business units perform in that Q1 FY26 period, according to the report?
Okay, so the Infrastructure Solutions Group, ISG, that's the division with servers and storage, the real AI engine room.
Right.
That had revenue of $10.3 billion, which was up 12% from the year before. But what the analysis really flags is the operating margin for ISG.
Improved.
Yeah, it expanded, went up to 9.7% from 8.0% the previous year. That margin improvement is a key theme.
Interesting. What about the PC side, CSG?
The Client Solutions Group, CSG, yeah. That brought in $12.5 billion in revenue, up 5% year over year. The commercial PC side did better, growing 9%.
Okay.
And within ISG, storage revenue specifically was $4.0 billion, up 6%. The source directly links that to the growing need for data storage for AI model training. Networking also did well, tied to AI buildouts.
That ISG margin expansion you mentioned, that seems pretty important if they're selling more AI systems, right?
It is. The source definitely points to this as early evidence of operational leverage kicking in.
Meaning as volumes go up, profits grow faster.
That's the idea. As those AI server volumes scale, the profitability improves. They noted overall non-GAAP operating income was up 10% year over year to $1.7 billion.
So efficient operations even while competing on price.
That's the interpretation in the analysis, yeah. Demonstrating they can manage costs and improve profitability as the AI business grows.
So if you pull together those financials and the massive AI orders, what kind of future picture does this analysis paint? What's the projection?
Well, leaning heavily on that huge Q1 order intake and the $14.4 billion backlog, the analysis projects a really dramatic increase in Dell's AI-related revenue.
How dramatic?
They suggest it could potentially hit $30 billion by 2026.
$30 billion. From what baseline?
The source contrasts that with about $8 billion they estimated for 2024, so a huge ramp up in just 2 years.
Okay, wow.
And they expect this rapid AI growth to drive overall company revenue growth of maybe 12–15% annually.
And margins. Do they see those continuing to improve?
Yes. They anticipate those ISG margins, the infrastructure group, could expand further, potentially reaching 12–14% by 2026. Mainly because the mix of business is shifting more towards these potentially higher margin, complex AI solutions. And this whole picture of strong growth and cash generation is also noted as supporting Dell's $10 billion share buyback program.
Okay, this definitely raises a key question. Tech is super competitive. What does this source identify as Dell's sustainable advantages, their strategic moat, so to speak, in this AI infrastructure fight?
The analysis lists several things it considers to be Dell's competitive edge. Number one, absolutely central, is that deep strategic partnership with NVIDIA we keep coming back to.
Right.
They argue this gives Dell advantages in engineering and getting products to market that are, hard for others to just copy overnight.
Makes sense. What else besides the NVIDIA connection?
Manufacturing and supply chain execution is a big one they highlight.
Meaning they can actually build and deliver.
Yeah, their ability to design, build, test, and deploy these really complex AI systems at scale quickly, even when specific components might be hard to get. They mentioned Dell's global manufacturing footprint as a key asset here.
Okay.
Then there are the established customer relationships. Dell has been selling critical infrastructure to Fortune 500 companies across all sorts of industries for decades.
So they have trust in existing channels.
Exactly. That provides trust, a deep understanding of what large enterprises need, and frankly, existing ways for those companies to buy this kind of complex gear. And finally, the source argues the breadth of their portfolio is a major advantage.
Offspin.
They actually position Dell as potentially the only vendor that can offer truly complete integrated AI solutions.
From PC to data center.
Yeah, from the end user's AI PC out to the edge and deep into the data center, all tied together with hardware, software, and services. The argument is this reduces complexity for customers trying to navigate the AI transition. They also mention specific tech innovations, like their work in liquid cooling, which is becoming critical for these power-hungry AI servers.
And the market itself that Dell is targeting, how big is this AI infrastructure opportunity according to the source? What's fueling it?
Oh, they describe it as massive and accelerating, driven by a few key trends.
Like what?
Enterprise AI adoption is just taking off, moving beyond pilot projects into real production systems. Newer stuff like agentic AI, where AIs act more autonomously, needs even more compute power.
Right.
The overall global AI infrastructure market is projected, in some estimates they cite, to grow at over 20% per year, compounded through 2028.
Huge growth rate.
Yeah. And the AI server piece alone could hit $150 billion or more annually by 2027. Plus, you've got growth in edge AI and hybrid cloud models also pushing demand.
And presumably, new tech cycles, like NVIDIA releasing Blackwell, forces companies to upgrade.
Exactly right. The source explicitly calls out the NVIDIA Blackwell platform as driving major hardware refresh cycles.
Because the new AI models just need more power.
Precisely. More powerful infrastructure, more memory, faster storage, better networking. It all needs upgrading. And they see this growth happening globally across more industries and into government sectors, too.
Okay, but no investment is risk-free.
Mm.
What potential downsides or challenges does this analysis identify for Dell?
Right. They do dedicate space to risks. They kind of break them down into two buckets: technology and market risks, and then financial and operational risks.
Okay, what are the big tech or market worries?
Well, the flip side of that great NVIDIA partnership is, of course, dependency. If NVIDIA hits supply problems or the relationship changes, that's a risk for Dell.
Makes sense.
There's also potential supply constraints on other key components needed for these complex systems. And just the sheer speed of AI tech evolution, Dell has to keep innovating constantly just to stay relevant. Competition.
Huge competition, not just from the usual hardware suspects, but also from the big cloud providers building their own stuff, and maybe even companies selling components directly. And there's always the market risk that, maybe enterprise AI adoption doesn't happen quite as fast as everyone currently expects.
And on the financial or operational side, what risks does the source flag there?
They mention the ongoing secular decline in the traditional PC market that could be a headwind for their client solutions group over time.
Okay.
There's potential margin pressure from intense price competition. Supply chain disruptions are always a risk, especially with complex global chains. Component cost inflation could bite. And then there's just plain execution risk.
Meaning, can they actually deliver on that huge backlog smoothly?
Exactly. Managing these massive, complex AI deployments for customers is a significant operational challenge. Fulfilling that $14.4 billion backlog efficiently is key.
Does the analysis offer any counterpoints? Factors that might mitigate these risks or provide some safety net? Yes, it does list several mitigating factors. For instance, while the NVIDIA relationship is key, they stress Dell does have a diversified portfolio. They support AI chips from AMD, Intel, others, so it's not total dependence.
Okay, diversification helps.
Their strong financial position is highlighted too, having $7.7 billion in cash, generating robust free cash flow that gives them resilience and options.
What else?
Their market leadership and those deep enterprise ties create what the source calls high customer switching costs. It's a big deal for a large company to rip out its core infrastructure provider.
Sticky customers.
Persuasive. And Dell's historical strength in operational excellence, managing manufacturing and supply chains at scale, is seen as a plus. The growing services business also helps, providing recurring revenue and potentially higher margins.
And that backlog again.
Yes. Critically, they explicitly mention that huge $14.4 billion AI order backlog again here. It provides near-term revenue visibility and reduces that immediate execution risk somewhat because the demand is already locked in. They just need to fulfill it.
Okay, so bringing this all home, factoring in the opportunity, Dell's position, the financials, the risks, the mitigations, what's the final investment verdict from this particular source?
The analysis lands on a very clear recommendation: strong buy.
A strong buy. And what are the key bullet points they hammer home to justify that?
They really reiterate a few core themes.
Yeah.
Dell's market leadership in AI infrastructure, backed up by that record backlog.
Sure.
The strength and strategic nature of the NVIDIA partnership.
Yeah.
The valuation, which they see as attractive given the growth prospects, pointing to potential upside based on analyst targets.
Right.
Robust financial performance, strong cash generation, and just multiple clear growth drivers coming from that accelerating enterprise AI adoption trend they see. They even suggest it could appeal to different types of investors: growth, value, income, tech-focused.
Does the source point to any specific events or developments, catalyst, that could potentially move the stock price in the coming months or years?
Yes, they do list potential catalysts across different timeframes.
Okay, what about near term? Say the next 3-6 months from when this was written.
Near term, they point to the upcoming Q2 FY26 earnings report. Investors will be watching closely for continued AI momentum. They mentioned Dell had actually guided for 16% revenue growth, so hitting or beating that would be key.
What else?
New product launches, things like those AI PCs we mentioned, or new servers using NVIDIA's Blackwell chips hitting the market, announcing major new customer wins or big AI factory deployments could be catalysts.
Any supply chain factors?
Yeah, improved availability of those key NVIDIA Blackwell chips. If supply eases, Dell can fulfill its backlog faster, which could be positive. And just general Q4 seasonality might help boost revenue recognition later in the year.
Okay, and looking at a bit further. Medium term, maybe 6-18 months?
Medium-term catalysts mentioned include seeing Dell's AI server revenue actually scale up towards that projected $15 billion plus annual run rate.
Proving the forecast.
Exactly. Seeing continued margin expansion in the ISG segment as the AI mix grows, expanding their AI wins in international markets, and continued growth in their higher margin services business.
And longer term.
Beyond 18 months. Longer term, they talk about sustained market share gains in AI infrastructure. The platform approach creating real customer stickiness, demonstrating significant operational leverage as the AI business truly scales.
Getting a higher valuation.
Potentially, yeah.
Yeah.
The market may be assigning a premium valuation multiple if Dell solidifies its AI leadership, and just general strategic optionality that comes with a strong market position in financials. The analysis also helpfully lists some key performance indicators, or KPIs, that they suggest keeping an eye on.
Like what?
Things like the quarter-over-quarter growth in AI orders, those ISG margins we discussed. Customer metrics. Are they adding new AI customers? Are existing ones spending more? Market share trends versus competitors. And signs of continued technology leadership. And, it's really important we reiterate the disclaimer that was included in the source material itself.
Absolutely. What did it say?
It stated very clearly that this analysis is for informational purposes only. It is not investment advice.
Crucial distinction.
Definitely. It says it's based on public info available as of May 31st, 2025, and strongly emphasizes that investors need to do their own homework, their own due diligence, or talk to a qualified financial advisor before making any investment decisions.
Standard but essential warnings.
Yep. Past performance doesn't guarantee future results, and all investments carry risk, including potentially losing your principal investment.
Okay. So we've really dug into this specific analysis of Dell Technologies. We've covered the investment thesis it lays out, the arguments for Dell's leadership in AI infrastructure, the financials discussed, the competitive advantages they see, that huge market opportunity, the risks involved, and the potential catalysts mentioned, all pulled directly from this one source.
Yeah, it definitely paints a specific picture, doesn't it? From this analysis's viewpoint, it's a company trying to really transform itself and become a dominant force in this booming AI infrastructure market.
Yeah.
By leveraging those key partnerships, especially NVIDIA, and really leaning into its long-standing relationships with big enterprise customers.
It certainly gives you, the listener, a lot to process if you're trying to get a handle on this space and how Dell fits into the puzzle, at least according to this analysis.
Indeed. I think the scale of that projected AI revenue growth, potentially going from $8 billion to $30 billion in just a couple of years, that's a huge number.
It really is.
And the related idea of operational leverage, that potential for margins to expand significantly as the AI business becomes a bigger piece of the pie, those are really central points to the bullish case presented here.
Well, thanks for unpacking all of that with us today.
My pleasure. Always interesting to dive into these analyses.
So here's something to maybe think about as you process all this. The source mentions that Dell's AI factory approach, offering these integrated on-premises or hybrid solutions, could actually be much more cost-effective for certain types of AI work.
Like LLM inferencing, yeah. The heavy compute stuff.
Right, potentially cheaper than doing it all in the public cloud. So the question to mull over is, what happens if more big companies decide that for their specific AI needs, maybe running things in-house or in a hybrid setup using systems like Dell offers, what if that turns out to be the better economic choice compared to just going all in on public cloud? What could that shift mean for the whole competitive landscape of AI infrastructure? Something to chew on. We really hope this deep dive has given you some valuable perspective based on the source material. Thanks so much for listening.